The streaming wars are officially over, and we have a winner. On December 5th, 2025, Netflix shocked Hollywood by agreeing to acquire Warner Brothers in a staggering $82 billion deal. This goes beyond the licensing agreement or a partnership. This is a full takeover. The studio that built The Dark Knight, Harry Potter, and Game of Thrones now belongs to the company that started by mailing DVDs. While the cable channels like CNN are being spun off, Netflix has claimed the crown jewels, the Warner Brothers film studio and HBO itself. This historic merger fundamentally changes your subscription, your favorite shows, and the future of entertainment. According to the contract from last Friday, December 5, Netflix and Warner Brothers Discovery announced a definitive agreement valued at $82.7 billion. For that price, Netflix isn't buying the whole company. They are removing the premium assets, specifically the Warner Brothers film and television studios, the DC Universe, and the entire HBO and HBO Max streaming business. This leaves the Discovery side, including cable networks like TNT, TBS, and CNN, to spin off into a new independent company called Discovery Global. This calculated move strips the debt-heavy cable assets away while keeping the valuable intellectual property. After months of rumors and a failed hostile bid from Paramount SkyDance days later, Netflix has purchased a 100-year legacy to cement its dominance. The transfer of HBO stands out as the most shocking part of this acquisition. For decades, the home box office was the gold standard of television, and Netflix's primary creative rival. Now, it is a Netflix brand. This means the entire library of The Sopranos, The Wire, and 6 Feet Under will permanently reside on Netflix, not just as licensed content, but as owned assets. Current hits like The White Lotus and The Last of Us will technically become Netflix properties when the deal closes, expected in late 2026. For subscribers, this signals the eventual death of the standalone Max app. Instead of paying for 2 services, the HBO Hub will simply fold into the Netflix interface, creating a library of quality deep enough that no other competitor can realistically catch up. When George R.R. Martin signed his deals with HBO, he never imagined his dragons would fly under the Netflix banner. That has become the new reality. The Game of Thrones universe, including House of the Dragon and the upcoming spin-off A Knight of the Seven Kingdoms, will now be overseen by Netflix executives. This is massive because Netflix has spent billions trying to create its own fantasy equivalent, such as The Witcher or Shadow and Bone, with mixed results. Now, they don't need to imitate the king of fantasy TV. They own it. Creative control remains the primary question. Observers are asking if Netflix's binge model release strategy will apply to future seasons of House of the Dragon, or if they will respect the weekly release tradition that made Sunday nights a cultural event. The Boy Who Lived is arguably the most lucrative asset changing hands. Warner Brothers had already announced a decade-long Harry Potter television series reboot, intended to be the flagship for their Max streaming service. That project is now a Netflix priority. The platform that hosted Stranger Things now holds the keys to Hogwarts. This alignment alarms competitors like Disney+. If Netflix executes this correctly, they will have the 2 biggest fandoms in history, Potterheads and the Stranger Things Army, under one subscription. We can expect Netflix to pour aggressive funding into this series, possibly accelerating production timelines to ensure they have a global hit ready to replace Stranger Things after its finale wraps up this month. For years, the DC Universe has struggled to find a cohesive rhythm compared to Marvel, but James Gunn's recent takeover of DC Studios was supposed to fix that. Now, Gunn will answer to Netflix. This acquisition gives Netflix ownership of Batman, Superman, and Wonder Woman. This solves a major problem for Netflix, which has never successfully launched a superhero cinematic universe, despite movies like The Old Guard or Project Power. With the upcoming Superman Legacy and The Batman Part 2, Netflix instantly becomes a theatrical powerhouse. They have promised to honor theatrical windows, but the long-term destination for the Justice League is now your home screen. Ironically, the sitcom Friends is coming home to stay. You might remember that Netflix paid $100 million just to keep Friends for a single year back in 2019, before Warner reclaimed it for Max. Under this deal, Netflix owns the show permanently. The deal also includes The Big Bang Theory, which remains a viewership juggernaut. By securing these two shows, along with their own Seinfeld rights, Netflix has monopolized the history of modern sitcoms. This comfort TV factor keeps subscribers from canceling during dry months. Discovery Global keeps the unscripted reality shows, but Netflix walks away with the rewatchable classics that generate billions of minutes in watch time. Warner Brothers, a century-old studio, sold itself to a tech company because of debt. Warner Brothers Discovery CEO David Zaslav has been cutting costs aggressively for 3 years, shelving finished movies like Batgirl and removing shows from streaming to pay down a mountain of debt. But it wasn't enough. The stock price stagnated and the cable assets continued to decline. Selling the studios to Netflix for a premium allows the shareholders to cash out and leaves the remaining debt with the spun-off cable company. Zaslav stated, "This deal ensures these stories will live on." But for many in Hollywood, it marks the failure of the traditional media conglomerate model in the digital age. This deal faced immediate resistance. Just 3 days after the Netflix announcement, Paramount SkyDance launched a hostile takeover bid for Warner Brothers, offering $30 a share. Paramount, which recently merged with SkyDance itself, tried to argue that a Netflix monopoly would be bad for the industry. They wanted to merge Paramount and Warner into one legacy giant. The Warner board rejected it, favoring Netflix's cash and stock offer. This leaves Paramount in a precarious position. They are now the smallest major player in a room with giants like Disney, Amazon, and the new Netflix Warner super entity. The consolidation of Hollywood is leaving them behind, and their future looks uncertain. The biggest fear for cinephiles is that Netflix will kill the movie theater experience. Warner Brothers is the studio of Casablanca and Dunkirk. Directors want their movies on big screens, not iPads. To seal this deal, Netflix had to make legally binding commitments to maintain wide theatrical releases for Warner Brothers franchises. They cannot simply dump The Batman Part 2 straight to streaming. This suggests a major pivot in Netflix's business model. They are acknowledging that box office revenue is still critical for blockbusters. We could finally see Netflix become a true theatrical distributor, using the Warner Brothers infrastructure to release films globally before they hit the app. As Netflix takes the premium assets, a new company is born from the remainder, Discovery Global. This entity will own the linear television channels that Netflix didn't want, including CNN, TNT, TBS, Food Network, and HGTV. It effectively acts as a bad bank of declining cable assets, though it still generates cash flow. This separation is key because Netflix has zero interest in running a 24-hour news network like CNN or managing cable carriage fees. Discovery Global will likely struggle as cord-cutting accelerates, but its existence was the only way to make the Netflix deal financially viable. It clears the path for Netflix to be a pure-play streaming and studio business without the baggage of dying cable technology. Signing the deal is one thing. Getting it approved is another. This acquisition faces a massive regulatory hurdle. President Trump expressed immediate skepticism, noting that the combined market share is a lot. Senators like Elizabeth Warren have already called it a monopoly nightmare. The deal isn't expected to close until the third quarter of 2026 because regulators in the US, UK, and EU will examine every detail. The argument against it is strong since Netflix plus HBO controls a large percentage of premium scripted TV. However, Netflix will argue that they still compete with Amazon, Apple, and Disney, and that this merger is necessary to survive against tech giants. It is going to be a long, brutal legal review. Regarding subscription costs, analysts predict this deal will lead to major price hikes. When you combine the content budgets of Netflix and Warner Brothers, the value proposition is immense, and Netflix will charge for it. We could see a new ultimate tier that includes the HBO library, possibly pushing subscription prices past the $30 a month mark. The days of cheap streaming are gone. With less competition in the market, Netflix has less incentive to keep prices low. If this deal goes through, you might be paying one giant bill to Netflix instead of smaller bills to 3 different services, but the total cost is likely to rise. The timing of this announcement is deliberate. It comes right as Netflix is demonstrating its power with the final season of Stranger Things. Season 5 Part 1 dropped in late November, and the final 2 parts are hitting on Christmas and New Year's Eve 2025. Netflix is currently dominating the cultural conversation, completely. By announcing the Warner deal now, they are capitalizing on their peak strength. They are signaling to the world that they have won the decade. The momentum from the Stranger Things finale, combined with the Warner Brothers news, creates a narrative of unstoppable success that helps distract investors from the massive $80 billion price tag they just agreed to pay. Over at Disney, executives are concerned. For a long time, Disney Plus was the only true challenger to Netflix's throne, banking on Marvel and Star Wars. A Netflix Warner entity changes the math. Disney now faces a competitor that owns DC, Harry Potter, Game of Thrones, Lord of the Rings anime rights, and the entire HBO back catalog. This forces Disney to rethink its strategy. We might see them become more aggressive with Hulu, or even look to acquire smaller players like Paramount to bulk up. The era of Disney being the undisputed leader of intellectual property is over. They are now facing a competitor of equal size, and the fight for viewer attention is about to get even more aggressive. Hollywood is undergoing historical consolidation. For 100 years, the Big Five studios competed for dominance. Now, we are moving toward a Big Three model: Netflix, Disney, and Amazon. The acquisition of Warner Brothers by Netflix marks the end of the old system. The studio that pioneered sound and film with The Jazz Singer is now a subdivision of a tech platform. While regulators may slow it down, the trend is clear. Content is no longer king, the platform is king. Netflix has successfully transitioned from a disruptor to the establishment, and with Warner Brothers in its pocket, it has become the very thing it set out to replace. The $82 billion question remains whether this benefits the consumer. We are gaining the convenience of a massive library under one roof, with Batman and Harry Potter joining Stranger Things. But we are losing competition, and with it, the pressure that keeps prices down and creativity up. The deal is signed, but the regulatory war is just beginning. As we watch the final episodes of Stranger Things this month, we are also watching the end of an era. Hollywood has a new owner, and the credits are rolling on the competition. Share in the comments if you think this monopoly is worth the price of admission.